In Money Watch, stocks rebounded across the board today. The Dow Jones finished up about 650 points.
And other markets climbed today as well. The Nasdaq rising by about 3.5%, the S&P by about 2.5%. And joining us now with more on this is Tom Kloza. He is a veteran oil analyst for OPIS, a price reporting agency that provides information for commercial contracts and trade settlements. Tom, thank you very much for being here with us.
Great to be here on an day for oil, that's for sure.
Absolutely. And on that note, on Tuesday, the president banning all Russian oil imports. What kind of impact did that have on the market today?
Well, today it didn't have much impact. I mean, the market had been basically recognizing that we might lose a few million barrels a day of Russian crude oil and refined products. Today, there were some reports about some sort of rapprochement between President Zelensky and Putin, and there was also a report that the United Arab Emirates, who have extra crude in their pocket, might round up some additional OPEC crude. So we kind of broke the string of increases, and we saw diesel prices actually go down $1 today, and crude down about 15 to 18. But retail continues to move up. As I speak to you now, we hit an all-time high of $4.30 for retail gasoline, and we're above $5 for retail diesel.
So considering everything that you just said, though, that it looks like there might be some relief in supply, at least on the margins there, how high do you believe that retail gasoline prices could continue to go up before we reach some equilibrium?
I think we'll take a little bit of a rest stop here, but I think the bull market for oil isn't over. The banks and the people that study these things and just for inflation say that we need to be about $5.20 or $5.30 for gasoline to be the equivalent of what it was in 2008, when, of course, we ultimately ended up in a recession with a financial crash. We're looking at much lower unemployment numbers right now and maybe a much better economy. But I would not write the obituary to the bull market right now. The world is using more oil than it's bringing to market each day, and hope sort of today, but it's just one day, so we got to be careful.
Right. And focusing on diesel, why might diesel in particular be harder for Americans to acquire right now?
Diesel is the global growth product. And if you think about it, and you think about all the commodities that are soaring in price, whether it be metals from mining or agriculture or other thing, and you think about the supply chain issues, we need diesel to sort of move things around the country. So prices for diesel really were flirting with $5 in wholesale, which would have equated to $6 for retail. And consumers don't seem that concerned by it, but it's going to manifest in higher prices for virtually everything you buy.
Tom Kloza, oil analyst for OPIS. Thank you so much for joining us. We really appreciate your insight.
Thanks for having me.